Hello everybody, we're here back again. So this is Trading Bootcamp episode number 2. In this episode, we will be breaking down trend lines and the basics. So I won't be talking about any fundamentals whatsoever, for example, the market structure shift, breaker structure, change of character. I won't be mentioning that because that will be in another future topic. From my notes, I believe that it will be episode number 4 or 5. We'll see. But in this video, I'm going to try to make it shorter than the first one. I just want to basically explain how trend lines move because and how trend lines basically work because the markets, right? They're based and they're built on candles, and those candles are built on patterns, and those patterns basically are in this trend line. So let's move into things. First of all, I want to give this as a bullish example. So let me repeat that. This is a bullish example. So one guy in the comments, I really know that guy, really good guy. He told me in the comment section of the last video that bullish represents the bull that is charging. So it basically represents how price goes up, right? Which was really interesting, and I actually didn't know about that, so I was really glad for that as well. So yeah, since I'm mentioning that already, if you have any suggestion or something that I'm saying wrong that you don't like, you can post it on the comments. You can say something on the comments. I read everything within like 48 hours, all right? So let's move into things. So as I said, this is a bullish example, right? Because we are in an uptrend, we are basically going up, right? And what is a trend based on? Trends are based on and they're built on higher highs and higher lows. That's the principle of everything. So in the market, we're going to move on to the examples after, but I just want to show you really quick this. So this is a bullish trend, and trends are based on higher highs and higher lows. These basically means these are points of liquidity, which it's another topic that I will be mentioning after, but these are what contains the market. Basically, the market moves in this. There's no other rule, no other thing to contradict that. I mean, I don't know. So yeah, as you can see, as the name suggests, higher highs and higher lows are basically when the market is forming higher highs and higher lows. So higher highs are formed when this previous high is higher right now, right, as the name suggests, and higher lows are the same but for the lows. So these are the highs and these are the lows of the trend line, right? These are all points of liquidity. And then these moves up in the market, those are called impulsive moves. So impulsive moves happen all the time. And basically with my strategy that I will be mentioning in future episodes, I basically tell you guys how to enter right here, basically at the bottom, so you can catch all of this, right? Because the market also moves from my strategy as well. But you really want to catch the impulsive move because that is when there's no pullbacks and basically price is distributing upwards as it should be because it's in a trend. Now, there's something to contradict the trend. You got change of character when trends basically change, because price is not going to always be in a bullish trend. Price is not going to be always in a bearish trend. They're going to change, right? That's what forms the market. And that can be caused by news and by just regular PA because, I mean, that's how you love to say it. It's life. Like the market moves, we move, right? It has to go up someday and has to go down someday. It's basically up to the point like what it wants to do, right? And you basically want to trade based on this trend line and based on this bias. This is one thing called a bias. So for example, let me give you an example. When you're trading, let's give an example that you wanted to sell, for example, during this impulsive move. You wanted to sell because you saw your setup, I mean, that can work because changes of character, changes on the trend can happen. But you gotta understand one thing. Trends are powerful, right? And follow your bias, right? You gotta have a general knowledge of where price is going. You can find that pretty easily on the 15-minute time frame. But I mean, people I see a lot of people that, for example, short sell here while the market is expanding and on a bullish trend. And I mean, sometimes I say that's kind of stupid because that may not work, but there's some confluences to add to that, which can actually really work, and you can actually predict how the market is going to shift in trend. But yeah, that's another topic for another episode. All right, so let's move on to some chart examples. So, because I said this will be a quick video, and yeah, this is episode number 2, and next week we will have another one. So I posted 2 episodes this week. In the next week I'll post 1 or 2. We'll see how my timing goes with school. So as you can see in the real chart example, we are in the 1 hour time frame, right? 1 hour time frame means that each individual candle of these was formed in 1 hour, was formed basically, for example, this candle formed in 1 hour, this one, and all the other ones. So once you start seeing trends on the higher time frames, you'll start to understand why the market moves like that. So as you can see, this is the general direction. This is the bias, you know. This is where price is going. It's on an uptrend. As you can see right here, this is called an uptrend. When the opposite is happening, when price is going down, for example, right here, this cannot be considered a trend. This can be considered a pullback, but we'll mention that in future episodes. Oh my god. So this can be actually, wait, let me turn it like that. Yeah. So this is a pullback, and let's say this is a trend, which is not a trend. Let's say this is a bearish trend. This is going to be called a downtrend. So it's pretty basic, pretty based on the name. Uptrend going up, downtrend going down. Yeah. So let me get rid of these. All right, so let's see here some examples that I marked out. So as you can see right here, we had a higher low from this previous low, and then that low got even higher from this previous low, sorry, and then that low got higher by this higher low, and then you got this higher high, right? Higher high. Why is it higher high? Because as you can see, this thing right here is called the liquidity sweep. We'll talk about after, but this basically means a change of character, because this was pretty downtrend. For example, yeah, I could have given this example there too. This is a short notice downtrend, or basically a pullback. So this move, as you can see right here, this down move is actually going to correspond to, for example, that down move that I just gave you is going to correspond to this one, right? It's a pullback. You can't be entering on pullbacks, but you gotta know how to identify and know how to spot one first, right? And then as you can see, you had higher high from this high, higher low from this low, higher low from this low, higher high from this high. All right, pretty basic, right? Pullback, trend continuation, pullback, trend continuation. And let me try to find a bearish trend so you could see the opposite. Yeah. As you can see right here, this is a pretty significant bearish trend, right? This is on the NASDAQ, but this is a pretty significant bearish trend. Why is it a bearish trend? As you can see, we had higher low. We had a lower high, then we had a lower low from, let me try to move this up a little bit. So we had a lower high from this high to this high. Then we had a lower low from this low to this low. Then we had a lower high from this high to this high. And yeah, it's basically highs, blah, 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 blah. Yeah, it's basically that. You just need to know that pretty basic concept. And yeah, this is a downtrend. And then this was a slight pullback. But then as you can see, price started to shift. And this was actually a change in change of character, meaning that this actually represented that trend was going to switch, which actually it did, right? So yeah, pretty basic terminology. So this video is going to be really short. I just want to give you one last example of impulsive moves, because I haven't talked about those actually quite well. So impulsive move, as you can see, from this low up to that high, right? This is basically what is called the distribution phase, or impulsive move, right? This I'm going to give you guys a little sneak peek of my strategy. This is called accumulation, then you manipulate. So you're basically creating the pullback of the trend, and then you want to catch that big trend continuation. That is basically my strategy, but I'll teach you that strategy in other episodes. So yeah, this is my strategy also, and this is the distribution slash impulsive move. As you can see right here, we had an impulsive move to the downside, we had another impulsive move to the downside. Impulsive moves are just moves that make the market, basically, which are explosive and impulsive, as the name suggests. For example, this right here is not, let me actually switch color. This right here is not an impulsive move. Why is it not an impulsive move? Because as you can see, price was accumulating for a long time, right? Before it actually went and impulsed straight up. And this was a pretty big impulsive down move to the downside. This was basically Trump speaking on tariffs on China. Yeah, I saw this live going down. I was crazy. That was pretty crazy there, yeah. So yeah, so we got 11 and a half minutes of video. Thank you guys for watching this video. This is episode number 2, Trendlines and Basics. On episode number 3, I will explain, I don't have it here marked. Let me go and check. So episode number 3, we're going to be talking about ICT concepts, basic concepts, for example, market structure shift, change of character, as I mentioned, liquidity sweep, for value gap, inversion for value gap, and all of those other stuff, which are basically ICT concepts. So now, I am an ICT trader, right? I don't trade another basic market model, but I know a little bit about SMC and market maker model. I think that's what it's called. I just say triple M. Yeah, that's basically what it's called. So yeah, we'll see you guys on the next episode. Thank you for being here. If you watch this far in the video, drop a comment of a pizza. Drop a pizza emoji because I'm hungry as hell. And yeah, thank you guys. God bless you.